Sir, please be silent. Right. We were discussing the consolidated accounts. Under the consolidated accounts, I have finished off the consolidated statement of financial officer. After that, we were discussing the consolidated P&L account or a profit and loss account. Under that, question number 1 I have finished off. Question number 2 also finished. Today we will look at the question number 3. Question number 3. Given below are the statement of profit or a loss account and the comprehensive income for Paris Limited, its subsidiary London for the year ended 31st March 2023. There are two columns. Paris is there, London also is there. After that, the revenue is there. The revenue is equivalent to total sales or a total turnover of the company. Then we have been given the cost of the sales, gross profit are given, distribution, administration, profit for the year 200,000, Paris, London 400. The additional information also given. Under that additional information, Paris Limited acquired 80% of the London share capital on 31st March 2020, 31st March 2019. Yeah? Yes. The goodwill was calculated using the M.C.A fair value. The goodwill will be calculated. M.C.A is the calculation fair value method. The goodwill impairment also directly given. No need to calculate. 38,000 given. The impairment are included in the administrative expenditure. When we are preparing the income statement, impairment expenditure is the expenditure the company recorded under the administration expenditure. Third one, Paris Limited made a sales to London at a selling price of 600,000 during the year. Not all of the goods sold extremely by the year ended. The net profit or a profit element include the London closing inventory 30,000. The last one, the figure of investment income in Paris statement P&L or represent the dividend received from the London Paris Limited. Is it clear? Right. Therefore, when you have this kind of question, first you have to develop the group structure. Number 1 is there, working number 1. Please write down working number 1, group structure. The group structure is there. The first one, Paris company invested in London Limited. Therefore, you want to take the parent is the Paris, the subsidiary is the what company? London company. They have taken over 80% of the ordinary shares or equity shares in London. Paris is the parent company, London is the subsidiary. Their requirement or their taken over is 31st March 2019, that is the purchasing date. The purchasing date given 31st March 2019, at the time how much the revenue, everything would be recorded. Is it clear? Right. Number 2, the working number 2, original working is there, the group structure. The second one there, goods was calculated using the fair value method. Goodwill impairment is there. Right. Now, come to the second one, impairment. I told you, if there is a goodwill impairment, M.C.A can be calculated two ways. What is that? M.C.A can be calculated two ways. Number 1, proportion of the what assets? Net assets. Number 1, proportion of their net assets is the number 1 method. Number 2 is what method? Fair value method. Under the fair value method, if there is any adjustment for the impairment, if there is any adjustment for a cost or expenditure, that would be adjusted in the what column? Subsidiary column. If you are going for a proportion of net assets method, the adjustment should be made on the parent company. Okay, now? Right. Therefore, directly they have given, we don't want to calculate the impairment. Impairment given 38,000 rupees. No need to calculate impairment. The goodwill will be given 5 times 10% or a proportion of whatever the method they will be given. We have to calculate the goodwill impairment. But this example directly given, no need to calculate. Go for an impairment of how many thousand? 30,000. Our problem is when we are preparing the consolidated, we have a parent company, we have a subsidiary, we will be having the adjustment column. The last column is consolidated column. We have a turnover, we have a cost of sales such as the item given. When you have such information, we know which column should be adjusted. If you are going for a proportion of net assets method, 38,000 would be adjusted in the whose column? Parent company column. Now we are going for impairment. What is the method suggested in the question? Fair value method. Therefore, whether given amount is 38,000, 68,000, 180,000 doesn't matter. If the method is applicable fair value, we have to adjust in the what column? Alright. If you want, you can write down this one also. If you need the information, you can write down the impairment will be adjusted in the subsidiary column, not in there. The impairment, goodwill impairment expenditure will be adjusted in the whose column? Subsidiary column, not in the parent column. Okay, no? If you are going for a proportion of net assets method, where we have to adjust? Should be adjusted in the parent column. Okay, no? Right. Third one. I am moving to original working number 3. Already we have finished off working number 1, working number 2, already finished off working number 2. Working number 2 is originally what trading? Intra-trading. We have to have separate calculation or a separate working for intra-trading. The question saying Paris Limited made a sales to London Limited at a selling price of 600,000. Therefore, P Limited sold the item to London Limited. P Limited sold the item to London at a selling price of how much is that? At a selling price of 600,000. Paris Limited made a sales to London at a selling price of 600,000 during a year, that is will be 31st March 2023. Not all of the goods had been sold externally by the year end. I told you, if there is any transaction between parent to subsidiary or subsidiary to parent, that will be called as an intra-trade. Once parent sold to subsidiary or a subsidiary sold to parent, if there is any elements, if there is any profit expected by the parent or a subsidiary, when you want to record the profit, you should sold the item. You should be sold the item to externally, or we have to sell to third party. But the question saying the entire 600,000 did not sell to other party. They are having a closing stock of how many thousand? 30,000 is the amount. 30,000 is the closing stock, meaning that out of 600,000, 570,000 sold to third party. That is why we are having a closing stock of how much? 30,000. If there is any closing stock, there is a what element? Unrealized element. If P Limited sold to L Limited with a cost, there is no URP. If the company expecting a margin on the sales value or a cost or whatever the value, that will be calculated, take it out from the original profit as a URP or unrealized profit. The profit element included, not in closing stock, no? Closing stock are there. The profit element, okay. The closing stocks are there, we don't know the closing stock amount, but this 30,000 directly given, what is that? URP, therefore no need to calculate the URP. Understood what I am saying? Yeah. I will repeat again. P Limited sold to L Limited amounted to 600,000 during the year. Out of that, not 30,000, some items are having a what stock? Closing stock, maybe 110,000, 130,000, 200,000, we don't know. No need to calculate. They are clearly saying, you don't want to calculate the URP, we will give the URP. URP is, how much is that? 30,000 is the URP. Is it clear? We don't want to do more workings. Next one. London 30 Limited. The figure for investment income in Paris Limited P&L account represents the dividend receipt from the London for the year ended. The column saying the revenues they are cost of sales, gross profit, distribution, investment income. The investment income of 160,000 recorded in the Paris Limited, they are clearly saying this is the investment not received by any other sources. The Paris Limited got 160,000 originally. That is the income we have received from the what company? London or subsidiary. Parent saying I have recorded 160,000. I have recorded 160,000. That 160,000 received from my original subsidiary of London. No any other sources I got as income. Is it clear? Right. That's all. We have to prepare consolidated statement of profit and loss account, other comprehensive income for the year ended 31st March 2026. Okay, right. Please write down. Please write down the full word. The question saying no need to have the sub order whatever the item. Please write down the full title. Prepare consolidated. I will write down. You can write consolidated statement of profit or a loss. Profit or a loss account. For the year ended 31st March 2023. This is our original title. Consolidated statement of P of loss account for the year ended 31st March 2023. Okay. With that, we have to start with the turnover. Turnovers there, revenues there or a turnover, both are same. Revenues there, we will be having the Paris is the parent company. I am writing the full word Paris. Again, there is a subsidiary of London. Third one, we should be having the adjustment column. The last one will be consolidated column. Last one will be consolidated. Are you okay? Right. Now we want to take the everyone I have given in the rupees 1000. Therefore, commonly I have written, we can put there common adjustment. There is 1000 rupees everything. I put in the common one, no need to put separate. 1000, this is applicable for a Paris, London adjustment, even for a consolidated columns. Okay, right. Now look at, I am going to start with the revenue. A revenue amount or a total revenue or a total sales is there. A revenue amount, first company 3,200, second company 2,560. Is it okay? We have to find out the total amount when we are consolidated. The now saying, if there is any intercompany transaction, that should be eliminated. Is it clear? They are saying 3,200 Paris Limited sales or Paris Limited gross or a Paris Limited turnover. 3,200 is saying inclusion of 600, that should be taken out. That should be eliminated. But we have to do that. Sales is the original credit balance. We have to take it. Sales account is debit. Cost of the sales account is credit. Therefore, I am using a black color. Look at here. 600,000 would be adjusted. Already credit. Now I have recorded debit. How much is the total? 3,200, 2,560 minus 600. That is the amount to be recorded in the consolidated. How much? Yeah. 1,000. 2 or 1,000? 5,160. Very good. 5,160 is the total revenue after adjustment for an intercompany transaction. Second one, after revenue, we have a cost of the sales. The cost of the sales 2,200 would be recorded within bracket. That is the debit balance. again 1480, that also would be debited. Credit in the cost of the sales, debit in the what account? Revenue. Therefore, here we have to put the 600 with bracket or without bracket? Without bracket. Adjustment. The adjustment saying, if there is a intercompany trading would be eliminated, debit in the total revenue account or a total sales account or a turnover account is debit 600, credit in the what account? Cost of the sales. Clear? Right. I have recorded this transaction. Again, I have another record to be carried out. 30,000 is the what RP? URP will be adjusted. URP, when you talk about the URP of the 30,000, we have to ask the question, the URP or an unrealized profit belongs to the parent company or a subsidiary company. This is belongs to whose? Whose PRP? Whose URP? Parent or a subsidiary? If subsidiary sold to parent, that belongs to subsidiary. If parent sold to subsidiary, that 30,000 belongs to the parent company. Therefore, we have to adjust in the whose column? 38,000 with bracket or without bracket? With bracket. Clear? Look at the intercompany URP. 30, no? 30, no? 30 or 38? You are 30. URP 30. Look at here, intercompany transaction, this 60 would be debited and also credited, turnover account debit, and the cost of the sale is credit. Is it clear? Now, this is the URP automatically will be adjusted in the profit. That is why when you increase the cost of the sale, that will be decrease the profit. Okay, can you tell me this figure? 2,200 plus 30 plus 1,480 minus 600. That is the figure, cost of the sales. That is the answer. I will repeat again, 2,200 plus 30 plus 1,480 minus 600. Because these are the three brackets, one is without bracket, positive, comma. 1,000, 3,000, 3050, 3050, therefore answer will be 0, 1, 6, 2,000, 6, no, yeah, 2,000, 1,000. Yes. 2,110. 2,110. The question saying that will be what profit? What profit? Gross profits. Is it okay? Gross profit of the group 2,110. To gross profit of the group 2,110. This is okay, 3050 or 3,000 or something amount. This is the correct figure? Huh? Wrong, yeah. You told wrong, that's why I am also wrong. Yeah, tell me the answer please. What is the answer? Right. That's why I ask you. 2,200 plus 30 plus 1 minus 600. What's the answer? 3,110. 3,110, therefore 6, 5, 0, 2050. Is it okay? Right. After the gross profit, you have a distribution cost. I write down DZ 160. First company, there is no adjustment. Second company 120, there is no adjustment. Total will be 280. Okay, no? 280 is the distribution cost. We have administration expenditure, that will be 400 for a first company, second company given 80. Administration expenditure for a first company 400, second company 80. In addition to that, there is an adjustment is, what is that? Impairment, no need to calculate, they have given 38,000. The problem is, we have to adjust in the first column or a second column. If it is a proportion of net assets method, don't worry about that, discuss here. If there is a fair value method, you have to adjust in the which column? Second column, because there is an effect on the profit of the subsidiary company. If you have recorded here the profit of the parent company manipulated, that is why we have impairment. I am writing the impairment will be 38,000. Right or wrong? 38,480 plus 38, 500, 518. 400 plus 80 plus 30. 500, 518. 5 and 8 will be deducted. Therefore, after deduction of the administration and other expenditure, our answer will be 2050 minus 280 minus 518. What is the answer? 1000. What is the answer? 2050 minus 280 minus 518. This is okay, huh? 518, right answer? Yes. Tell me the right. 1252. 1252 is after deduction of the DC. This is called what? Profit from operation. Yeah. What is the name for this one? Profit for the profit from operation. Yeah. Yes. Therefore, this is called profit from operation. You have to write down 1252 profit from operation. After that, you have what income? After that, you have an income statement. Investment income of 160. Is it clear? Note number 4 saying, if there is a income, the figure for the investment income in Paris statement of P or a loss represent the dividend received from London for the year. Paris Limited recorded the investment income. It's not outside. This is the income. Paris received from the what company? London. Therefore, this is intercompany income. Intercompany transaction would be eliminated. Intercompany transaction of 600 eliminated. Same way, intercompany investment also should be eliminated. Clear? Therefore, intergroup income 160,000 will be adjusted. Therefore, there is no what income? There is no what income? Investment income. Again, 1252,000. What is that? After deduction of the investment income, we call as a profit for the year. Profit before tax. Therefore, this is profit before tax. We have a taxation. The company paid a tax of 3,000 for a holding company. Second company, First company how much? 400. First company 400. Second company 480, no? Second company 480. Total will be 880. Is it clear? Right. Therefore, 1252 is the tax profit before tax. 880 is the tax aggregation of the parent as well as the subsidiary. 1252 minus 480 is, what is that? How much? 372. That is profit for the year. profit for the year I have calculated. The profit for the year or profit after tax of the consolidated group 372,000. With that, we have to add the other comprehensive income. You have to add the other comprehensive income. Other comprehensive income. If there is other comprehensive income, you have to add. There is no other comprehensive income. Therefore, this will be total comprehensive. What is that? Income. The last line we have to end up with the total comprehensive income of 372,000. Okay, right. Can you do one favor for me? This is the column represent the whose column? Subsidiary. This is the column substance because I want to calculate the non-controlling interest amount. Therefore, for that I want to calculate this figure. Please tell me the London column. Can you tell me the answer, please? This round or a circle. 2560 minus 1480 minus 120 minus 80 minus 38 minus 480. How much? Yeah. How much is that? Can you tell me the figure, please? What is the amount? 200? 362? Okay. 362,000 is the profit for the year of what company? Therefore, on that, on 362,000 is entitled how many percentage? How many percentage? 20% entitled for M.C.A, 80% entitled the shareholders of the parent company. Therefore, whatever the profit earned by the London company or a subsidiary company, that should be split between the parent shareholders as well as the M.C.A. Therefore, here you have to write down attributable to number 1, M.C.A is our applicable percentage is 20. Can you give 20% of 372,000? No. You have to give only 20% on the subsidiary column. 20% multiplied by 362,000. That is the amount. The balance will goes to the shareholders of the what company? Paris company. Okay. How much is that? 20% on 362. 72,400 is the element for that one. Balance will be 600, 280, 1, 2, 89. Okay, thank you. 1 balance 2. No. You have to find out the balancing figure from 372. We have to find out 20% on 362. The balancing figure, the shareholders of the Paris is 80% 362, 100% of the London company. Okay, what is the amount we have? The last column, we have to find out the attributable to last column. 200 and attributable to last column, I am saying 372,000 is the total. Attributable to 20% goes to M.C.A on shareholders or a profit of the subsidiary. The total amount of the consolidated 372, On 372, 20% of the 362 goes to M.C.A. balance entirely shareholders of parent company. Can you remember that question number 1 and 2? The same way I did. Can you check it, the question number 1? Answer also is there. How much is that? 290? Yes. 299,600 is the shares applicable or shareholders or a profit applicable to shareholders of the parent company. This is 299,600 included some amount from the subsidiary, full amount for a parent company. Some amount from the, that means 80% on this one, the balancing figure subsidiary. Look at here, subsidiary company 362, entire amount 372. There is a small gap between the consolidated and the subsidiary. That is why major portion from the subsidiary 80% can be adapted for holding company of the Paris. The London 20% goes to M.C.A, 80% goes to the parent company. Okay. Understood? Yeah. Understood or not? Is there any clarification on that? Is there any question on that? Or the way of calculation, what is that? Don't talk among you. If there is any, ask me, I'll clear. What about that? No question? No doubt on that. If there is any clarification, ask me, I will clear it. Otherwise, I will move to the other side. Yeah, what about? No.